All right, good day, guys. Good morning, good afternoon, good evening, depending on when you're watching the video and where you're watching from. So, sorry, the video is coming late than expected. So, yesterday, network actually wasn't fair on us, right? And I'm in this morning. So, I'm just making this everyday section now. So, I wanted us to have a recap of how our trades this week went, and I wanted you guys to learn something with regards to last week trade. You understand? Don't mind how of my that is looking like what's important is that you know what you're doing, it's making you money. So I was saying the last stuff I sent to you guys in the group, I said something to the traders out there. Note that other blocks are now working out. Unlike last week that price were using FVG, fair value gap, as a demand or supply to continue this direction. So those of us traders trade with us last week can see what price was doing on a okay, let's use pair of JPS which we trade up to, right? On normal day, a heavy chart pattern moves this way, it higher highs, higher lows this way, higher highs, higher lows this way. You understand? But the price was moving as of last week looks different, which made it look like our strategy not working, right? We had a lot of stop outs. So price actually like you the fact meant that USD was actually very weak, you understand? Was very weak, and then any currency that has USD as quote currency or base, it tends to we like what way should I use now? Probably the USD, you understand? So this was a chart pattern of JPUSD, you know. It wasn't even reversing up to 50% of its impulse move, right? There's what we call impulse retracement, right? Right, I made an impulse move. And normally this was to make a retracement, of which we say that a heavy chart pattern should make at least up to 50% retracement, which is maybe around here. You understand? Most of the time, it tends to come around here to mitigate this previous demand it has left here, and then to bite it offside. But price was rather giving us stuff like this as of last week. So, which left a lot of people with missed entry, a lot of people with stop losses and all that. So, but this week, the correction has been made. You understand? So that's why I told you guys, your strategy won't work all the time, right? So, what the best thing to do when you observe that your normal win rate, you're not observing it now, but trade less. You understand? I still last week, trade less, right? Some days you end up not even calling a single trade. When I see, okay, this is a good trade. I call. If you hit our stop loss, it's fine, right? You respect it at this was the market. This game is game of either you win or you lose, right? So you are a stop loss or take profit or you're taking partial. So it happened that way. And we took it as we saw it, right? So just note stuff like this. I can remember one of my mentee, I mentioned it to him, right? Because at the time I saw that he was not feeling like, oh, like what's going on? Like, yeah, he actually told me what's going on. It happens, right? It happens. The chart changes. You understand? The chart changes, structure changes. You understand? So that's why myself, I'm SMT trader. At the same time, I have few knowledge of ICT. So I read a structure I see. I know, okay, go with ICT strategy. You understand? But I love SMC. So in this week we have trading SMC. So this is our charts in this week. So what I do every week after taking the trade, I tend to clear it, right? But I have my reasons for leaving these trades as of last week and last week's other stuff. So let me or what I do. So after explaining something to you guys that actually my mentor did actually give me this. You understand? Because there is this thing you should know. When you fly on the wings of your mentor, your journey tends to be a little easier for you. What do I mean? I've been providing you guys with signals. Now we have an ongoing challenge, right? $100 challenge going on, right? Now, I never had such during my days of mentorship, like when I was still learning this Forex market, you understand? So my mentor never did that for me. So I blew a lot of accounts. Now, you guys, for you to learn, to be honest to you, you're gonna blow a lot of account. So I never wanted this money to come from a hard-earned money. With this current country situation, the economy, and the rates of dollar, imagine funding at 1,600 naira per dollar. So that for you to fund $100, how you need to up to 160,000 plus to 400, and then you're blowing. $100 is possible to blow in a single day, in a single trade. Just enter good, enter BTC, you're gonna blow. I'm like, no, let me help you guys. Let's do something. Let's set $100 to 1,000. And then you can make withdrawals, have fun, enjoy. And then I will let you guys to start trading your setups. That's when you begin to lose. Obviously, I have not seen any successful trader say that he never lost, he never blew accounts. You understand? He never blew accounts. At this time, I blew account. But account I blew is account I can afford to lose. I can just come up one day, say this account, I want to fund it $200, I want to fund it $150, I want to fund it 300, and I'm going in for margin, right? You know what happens when you go in for margin? It's either you come out with times three, four, or five of that account size, or you're losing everything. Unless in station, maybe when the trade is going against you, you decide to cut your loss. You understand? So everybody can blow account, but you are seeing new beginner, you have not even made money from the industry, and you're giving the industry what you have. That's what I like happened to me when I started here. But I didn't want to get to experience so but it's actually frustrating, right? But I'm not comparing then and now. That time when dollar was 600, 700, I know something like that. So it's something thousand and $100. You understand? So you can see that the current rate now, going to $400 is what we used to fund another times three before. So now, so I want you guys, if you're not in the channel, I can still give you the benefit of like have $100 fund and then join the channel. You might end up not to achieve that, not to reach $100, but if you can take $100 to 500, 600, it's an achievement. You understand? Because as you never had this challenge, you wouldn't even have the single $1. Instead, the one you have, you give it to the industry. So now, I want to teach you guys how I was able to catch up trades. This week, we took a total of 6 trades, if I'm not mistaken, and we lost just only one, right? We took one, okay, this is 1, 2, 3, 4. And then I think we took two trades, on, okay, we took a total of 6 trades. We had one break even, and then there was another trade I took here. I think it was a news event. So I went for a buy, and then it went against me. Then we had another trade on Euro USD, which went massively. So this is USD. So we get to Euro USD. So we had one break even. So you can see I actually did what I should be here. This was actually the margin to buy about. That's only before. I think about 22 pips. I was like, wow, we're making money. Just to come out to see our stop loss has been picking. So that's where change of character happens. You understand? So just this structure, the market, you know what you want to do. You understand? So you just follow up. So when I saw the change of character, what did I do? I went for price a test here and then you hopped in on the sell. Now, I've always told you guys that's what we call demand turn supply and supply turn demand, right? So you are using this. This is supply zone. You understand? This is supply zone. Okay, let's take this another zone here. This should be a demand zone. So you know demand is where you're buying and supply is where you are selling, just that way. So let's get our patch two. So let's see price moving this way, right? Higher highs, higher lows, higher highs, higher lows, higher highs, sorry. Higher lows. And then you see price in the supply and demand trader, you see price coming to this zone. You want a short there. What happens? Price come here, it tends to what do you call it again? To have a change of character, like to get rejected. But at the end of the day, most of the time, or I don't know, say most, some of the time, price break the supply zone. Depending on the time frame you're seeing the supply zone. If it's a smaller time frame, 5 minutes, 15 minutes, 30 minutes, those are the some price tends to break easily. That's why every day before you execute trade, always have a view of a higher time frame. 4 hours is okay, right? One day is okay. Look at it and say, okay, this is what still happened. Then go back to your small time frame. Have your entries. You understand? Map out your key levels. I've taught you guys. I made a video. If you are watching this video for the first time, those key levels. Go to my YouTube page, right? Forex Academy on YouTube. Watch, search for the video, right? How to plot out key levels, right? Top-down analysis. Yes. So most of the time, you break this supply zone, and I'm breaking it. There are some persons that would consider it as a how they call it as a liquidity sweep, right? I mean, the question is liquidity grab or liquidity sweep, both are the same thing. And when price tends to come back here, they want to sell, right? But then I tell you what happens here is this is a supply coming to be a demand. When price breaks this, they're gonna come back here to use it as a demand then to continue to buy, right? And now let me make it easy for you guys. There's what we call candle wicks. Let's draw something like this. That's what we call candle wicks. So we are using this as a candle, right? We're using this as a candle, and then we have this. We have a wick here. Okay, let me draw it all this extent. Okay, so we have it. Let me extend this. All right. So if actually when price was moving this way, it was moving, now came to this supply zone, broke it out, and this same candle also closed below here, like the body candle didn't close above the supply zone, which we have initially mapped out. It closed below as a candle wick, and then another candle starts to form. Keep on giving you maybe, and then next one might form this way. This, remember, this candle has closed here, right? So the next candle is forming from here. Maybe we need to move to the upside this way. But at the end of the day, still close as a wick. Let me not make it confused. Let's not make it complicated. All right. So the next candle close this way, still giving you wicks. You understand? Still giving you wicks. It's actually a confirmation of this price is having rejections here, right? It's having rejections here, and this actually just a liquidity sweep. As long as the candle closes as a wick, consider it as a liquidity sweep. You understand? So this is for your candle confirmation. The next thing you will do is maybe to go to your small time frame of 5 minutes, observe for a change of character. You understand? When I say change of character, now price has been dropping the higher highs and higher lows. Now I'm moving this way, right? So if I keep on ranging here, do not take any action. You understand? Don't take any action until price. First of all, if you want to risk it, if price goes below this range, right? Then you can hop in for yourself. Or better off, you wait for it to go below here because there was a major low before this ranging. Before this range we had here, this was the major low price at. So if price drops this way, so let me drop this here. If price closes below here, then here we have had a change of character here. You understand? You can map this out as a change of character. Then on its retest, on its pullback here, we short. You understand? On its pullback, we short. Just this way, we short. So that's simple. You understand? I'm just trying to tell you how to make confirmations when I'm trying to execute a trade on a supply or demand zone. Right? That's why most of the times I don't just use what do you call it? I don't just use what do you call it again? Um, limits, buy limit or sell limit. Because most of the time, price might come there and take you out. Like just take your stop loss for you to come back. So buy limit and sell limit, I will say it was meant for those who are non-full-time traders. Maybe you're a 9 to 5 forecast, but then you still have Forex as your side hustle. You understand? So you have made analysis in the morning and set up your limit, and then you are off to work. You understand? So you want price to come there, mitigate your trap, and then begin to move your favor, and then you have your stop loss to stop it out if it goes against you. But I would say if you see something that always have you on your screen, just set your alert, right? Just alert, okay, fine, I'm today, this is my stop loss. Now I'm on my screen waiting for my confirmation. So when you have such confirmation, you're hoping for a sale. I'll show you how you can have your candlestick confirmation. Apart from the different kind of candlestick confirmation you should make, you have your evening star. There are a lot of them. You understand? So you need to learn all this. I can't start using candlestick patterns here. So I just this is an example of a chart pattern confirmation to hoping for a sale. You have candlestick pattern. You can Google it, or I will send this video in the YouTube though. So if you need, and I have a file I will generate for you. If you want to learn candlestick pattern, then you can message. I will put my number somewhere. Message us on WhatsApp to get that file, which will help you. So let's remove this and then get back to. There's something I want you guys to learn about liquidity. You understand? For you to know the difference between liquidity sweep and then liquidity run. You understand? It's almost the same thing we are doing here. So we call liquidity sweep and liquidity run. Remember that liquidity, when you financial liquidity, they are just those invalid zones that are execute their market. You saw a supply zone, you saw a demand zone, or trend line supply or trend line demand. You just hop in. What happens? Price takes you out and then begin to go to your direction. That's a liquidity grab or liquidity sweep. Then most of the time, price takes you out and then keep on going to that direction. Like you want to have a sell, right? But price to this supply zone and keep on going to the upside, right? Or maybe to the upside and then continue to the upside. That's a liquidity that's a liquidity. You have liquidity sweep, liquidity gap. Oh, sorry, sorry. Okay, what I'm trying to say, most of the time this thing gets off your head. I'm saying have a liquidity sweep and then a liquidity grab. You understand? So when such thing happens, it's actually just a liquidity um run. So a liquidity run and liquidity grab. When price takes your supply zone out and continues to the upside, or if it takes your demand zone out and continues to the downside, it's just a liquidity run. So we see that in the chart now. Let's remove this. All right. Okay. So guys, let's do something. Let me, even if I don't find it in the chat, I will just try to use something to show you guys how to know when it is a liquidity sweep and then when it is a liquidity run. You understand? Now let's use for an instance. I'm looking at it on the chart here. That people have something on the chart. Okay, I've seen something. I've seen something here. I'm going to take more time so we can have a better view. Okay, over here. Over here. See, guys, let's make it simple because what I wanted to do, it doesn't give me what I wanted in the smaller time frame, right? It doesn't give what I wanted in the smaller time frame. Okay, I can still use this for an example. I will have to remove this so you guys can see what I'm saying. I have to remove this. Okay, now let's say obviously it should be a newbie trader that would do this. Let's say just this newbie trader who wants to use here as a supply zone to sell, right? If you remember that what happened, then maybe price was breaking down to this side, and he was expecting that if price retest here, he should short, right? Now you can see what happened there. You can see that candle that broke to the offside. You can see this candle. I will highlight it now. Now you can see the candle. That candle booked it offside. You can see how that candle booked it offside and then still closed as a week, closed with a week and not as a full body candle, right? When you see so those are just liquidity sweep or liquidity grab, right? Right, just now most they will tend to use a tight stop loss, right? You want to execute in here and you're placing your stop loss just exactly um above your order block this way. You understand? Because you want to risk little, you understand? And then what happens? The price takes you out and then still goes your direction, right? Still goes your direction. So that's liquidity sweep or liquidity grab, you understand? But in situations where price do stuff like this, um, okay, there's an example of when I was taking out here. I was taking out here. Remember, there is something I deleted here. We had a long we took here, right? Before I was taking out. So I guess that should be a 20 pip stop or 15. I don't know anyone. Let's place it of 15. Because normally I use 20 or 15. That's what I'm saying is either 20 or 15. So now what happened here? Price mitigated my zone. First of all, started buying, like moving to my favor, and I was like, yo, making money, you understand? And then before you know it, price took me out. Now, if this price had taken me out here, right? If this price had taken me out here and then still close as a week, then continues the offside, that would be a liquidity sweep or liquidity grab. But for the fact that price took me out, right? And then continues to the downside, that's a liquidity run. That's just you getting your buyers for the day wrong. Right? Because I think this year it was trade I took on the London section, and then price took me out, continues to the downside. That's just a liquidity run. I've got my bias wrong. You understand? But then how would I know that price is about to change character here? Because when you go to the time frame, there's not even a supply zone there, right? But I was just following my trend line. So that's all price. Okay, it's a bought and off. Now you want to have a little retracement. That's just what happened here. And that was taken out. You understand? So now you know if you can see, I say something about supply on demand and demand for supply here earlier. So you can see this demand order block. When you drag it to this side, you can see it was this same order block, the price after price broke down here. Let's use it so you can see it. After price broke down here, it was still this other block of price has used to retest and then continue to set to the downside. But on that retest, it had a liquidity. You understand? That's why if you don't know what you are doing here, you will end up being taken out in the like you will, in fact, you will have you'll be friendly to stop losses. That's why most of the time when I trade in the London section and I'm being taken out, I just allow price to do what I want to do. And during the New York session, if I see a clear setup, I hope if I don't see, I'm done for the day. I'm thinking that today I lost. That's trade psychology. Because when I'm teaching you, I touch every aspect. You have taken a trade, you have lost, right? And then you're still forcing it to you want to get back what you have lost. And you keep on losing, bro. Now, if I buy here, price took it out. Now, let's say you know that it was a liquidity wrong because of price took it out, and then you now remove this. Let's get this off, and then you want to use this demand zone to shorts, right? You want to use it to do your demand on supply, and you want to steal this clip, you want to risk 10p, you want to risk 8p, you want to risk. You see, even 15p set was taken out. You can see it on 15p was taken out, and you want to have a take profit somewhere here, right? What happened? Price still took it out and then continued to sell. That's frustrating, bro. When it happens, you're like, what's happening? You ask yourself, what are you doing wrong? Like, I don't even know who you want to blame, but you're the person that's getting it wrong. You're the person that don't want to calm down. You understand? So what happened is there have been a market structure shift. That's what we call a change of character. So I see market structure shift. Just allow price to do what you want to do, right? Or to be on the seller side, if you don't want to open on a trade, they have your stop loss above this the last swing high I had there. When you do that, they can see you're risking higher. This is about 30 pips, of which is not professional. You understand? It's not professional. I don't trade more than 20 pips. I can only trade up to 25, 30 pips on gold. You understand? But GPUSA, 10p, 15p is okay for you to open on a trade. You understand? So I don't even get the point I'm trying to make. I'm just trying to tell you, patience is very important in this game, right? For you to watch, don't see that sort of thing you have missed. It always replicates. It always come, right? The market is open Mondays to Friday for you to trade. If you still want to trade weekend, learn synthetic indices, learn how to trade synthetic, learn how to trade BCC, right? It's how you're looking to trade. You cannot close. This is not that kind of Ponzi scheme or whatever that is. That you close those and then you want to pack the money before you close. No, this is about the world economic event that we are trading. If you don't know, right? So it's not gonna, excuse me, it's not gonna crash one day or something like that. So if you miss an entry, it doesn't make you like, oh, blah blah, all those stuff, right? But even want to have a trade here, I can actually see a this should be your other block, right? Remember if you want to do an other block for too short, you are covering the last um buying candle, and you can see how price tapped in the snapper entry, boom, and it dropped. Look at it this way. When you place your short position, you can see, sorry, so you can see it needs trade. You understand? That's when you look at it. If you can remember that it should be the last buying candle on the previous swing high. Like this was a lower lows, lower highs, lower lows. So this lower highs here, that's where you should be looking at your order block. And you should be looking at for the last buying candle, which is this candle pointing out here now, right? As you're joining, I see how price mitigated the snapper entry and then it dropped, right? Dropped, still retested here. Now this zone now became valid for to join order block. Just that way, you understand? So it's that simple. It's that simple. So now if you watch out here, this was a trade we took on Friday. um Friday 31st August. He trade it took, right? So now I can remember one of my him, right? There was a question there was a day he made a setup and sent to me. It, he made a setup. Okay, I said, okay, this is a similar chart, but I think that setup was for a buy, right? It was for a buy. Now price was moving. We are using this in the reverse case. Price was moving, right? Then he came somewhere here. Um, he came somewhere here to draw his other block, right? Came somewhere here to draw his other block, and then he put his short position from here to short, right? Now I came to correct him that now you should know that you should be drawing your other block from that particular high or low that gave that break of structure. You understand? From that particular high or low that gave that break of structure. Remember that, okay, when price is tested all the way down here, when price is all the way up here, then I started moving to the downside. It came here, there was actually a demand, mini demand here, that gave it a pullback that it get rejected, you can see. I made it to have a little rejection. It began to move to the upside, right? Now it pulled back a little and then still broke structure. So when you look, you can see that here now is the lower highs that gave this break of structure, right? That is why I drew my other block here, right? Now my confirmation on this is that I have my other block, right? I have my trend line, which Now I can see price having the first touch here. Down here was second touch, and then down here, which I had that had that. Don't worry, I'll show you guys in my channel where I send the signal. Should be the third touch, right? So somebody who actually hopped in here, if you're using a bigger stop loss, maybe having a stop loss above this trend line, it might be still on the trade, right? But it's actually risking. It's unprofessional. I can actually call it gambling. Like gambling. Oh, yeah, gambling. So you can see what I'm up as. I can see that it's like XX on red. That's inducement, right? These are inducement zone. You can see how price just easily took it out like with healthy bullish candle, took it out to the upside there. Respecting this trend, expecting my other, it never went above my other block. Expecting the other block, expecting this trend, then went to the downside. So I have, is it 3 or 4 confirmation here? I have my trend line confirmation. I have my other block, right? I have my other block here, which correspond with the trend line. Like other block happens to come correspond with the what they call it again, trend line. The same area I have my trend line supply was the same area I have my other block supply. Now there is a liquidity. So remember that inducement, they are just your invalid zone that is execute your trade. So you can call it a liquidity that price has taken out. Right. Sometimes I can use this XS to represent, I can use dollar sign to represent liquidity. So those are my confirmation. Now about this trade, this second trade was a news event. Now when we hopped on this trade, when the trade moved about 25 pips or so, I asked everyone um to take their profit. The reason was there will be a rejection here. Right? So when this rejection started happening, I asked them to take your profit. And because I knew there was a news event on US coming by 1:30. About 1:30, I mean, they explained to them what they should look at for the news, and then shorts, right? People shot with me, and those who are afraid, they didn't have money trade. So he made money, like he made a lot of money on that Friday. So they didn't have a break of structure here. Initially, then when this particular candle, I will highlight it. On this particular candle, this candle now, this candle that closed with a week, when it came down here, and then pushed up and closed with a week, I was like, yeah, it seems to be actually demand. The price seems to become a double bottom here to buy. And if that happens, obviously this trend line will be taken out, right? That was when I actually took my profit on the trade that I was on. When this happened, I took my profit first. I was like, bro, be on the safer side. You understand? But at the end of the day, price say the next candle that formed, the next 15 candle that formed, then broke below it and it closed with a full body candle. So that's when I confirmed this to be a break of structure, right? That one I consider to be VOS, a break of structure. So that means this trend still valid. Because by next week, what we're expecting now, if price retest from here all the way here, right? And you can see it is clear there. You have another block here. The last buying candle, cover it this way, and then we hopping in, sorry, for a sell here, right? But always remember, don't just hop in on a shade. I will set my job, right? And then I'll price to mitigate. I will set my alerts. And once it's there, my alerts, I get notified, and then I make a candlestick confirmation and all that. Then I hop in for the trade. You understand? So that is how simple. That's just how simple it is. Now there is a question one of my mentees, I think that's it of mentees that asked me. He said, I sent a signal in the group one day, and which was a sell limit or buy limit. I don't know. I know I sent a limit order. You understand? I was like, since you're waiting for price to move all the way here, right? Then before we sell, which is still the same movement. Why not we buy from here to here? Then we still sell from there, and then we have double that money. When I saw that message, I laughed very hard. If it wasn't like he was having a real account trade now, like you just try it out. You understand? Because now this is price. That's why you know that the trend, right? The trend of the market is your friend, right? Because I will feel more confident and relaxed when I'm trading towards the trend than when you're trading against the trend. What do I mean? Obviously, when looking at my chart, you can see this is a downtrend. This is actually a downtrend on JPU. We're having break of structure to the downside. And I always tell you guys, trade towards the break. You can't just see a demand here because you're seeing a demand here, you want to buy. You buy, you'll be taken out. You'll be taking, you can see what price did there. You'll be taken out, then it will push a little up. You'll be like, oh, I was taken out. Some people might stay hoping for the buy and you still taken out again. Because now this is price, right? This is just like impulse retracement. impulse retracement, impulse retracement, impulse move, retracement move, right? So now you don't know to the extent price is turning down to, right? But for the fact you are following the trend, you will know that this price is existing. If this trend continues and down to it should continue. This is the extent we should retreat to, and then we should continue the sell down, which we also expecting a break of structure here. Most of the time, I might have my take profit below here because once this thing should continue the trend, it should give a break of structure. Sometimes I be like, I don't want to stay because most of the time, if you come here, price will come here, have a little rejection and then still break. If I don't want to be in the market for long, I'll just have my take profit maybe around here, right? Once I'm being taken, I may take profit, I'm okay, you understand? So I'm saying that this price is just dropping. So you wouldn't know to the extent it is dropping to before it buy. So you taking any buy opportunity is actually a risk trade. But sometimes some people tend to, you say, that you should look at what is happening at the left, right? And then know what's going to happen in the right. As looking at the previous, know what's going to happen in the future or present. Now, if you look at it, there's actually a demand zone of each price has mitigated. I might not be doing it quite well, but this is actually a demand zone. You can see price has mitigated, and then it's pushing to the offside, right? But remember that currently the trend is a downtrend. There is every possibility of price to just take out this trend, even without you better take out the demand, even without testing back here. You might take it out a little and then begin to test back, come somewhere here. You understand? Now using this, let me come. What I can tell you guys currently now, you see this area. This area currently is an inducement. Don't try to sell from here unless you're a scalper and just take 10 pips, 15 pips and you're out. You understand? Because most of the time, I might just take it out like that with less stress. So now because there was a demand here, right? So people will tend to buy from here. Trust me, I can tell you that 40% to 50% of the time you do it, it might work out for you, right? But the very day to take you out, but it might be the day you decide to use a bit of sign and you send it to the village. You understand? So this is demand. There's a opportunity of price to still go below it this way. You might take liquidity like close with a weak candle, not with a full body candle, close with a weak candle, and then test here to stay fail. You understand? That's what I will not pay. And secondly, I don't trade on Mondays. So I'm expecting whatever movement the price is going to make before it to come here to happen on Mondays. Then so that I hope on my trade safely and calm. You understand? But there's also the possibility of price to sell much, right? From here, talking about there's a possibility of price to sell, like to continue to draw from here, like to take out this demand area, right? You take it out this. Then when you begin to push it offside, started giving stops like this. This might take Monday, Tuesday, and then might end up to touch this trend at this area. Now, this area we are considering as inducement, I'm gonna use it to sell. You understand? Because I'm still following this trend. Because if I'm waiting for price to come to the area, now let's like this. Okay. If I'm gonna wait for price to come here, then this trend line has been taken out. Now, even you selling here is a risk trade. You understand? It's not a risk trade. So I would prefer to try to say if I'm taking that line, I've been taken out, and I will rest for that day down here. Because once people are taking this trend line, because this is a market structure shift. This is a trend line structure. The price takes it out. Then you shouldn't be shorting. Or let me when it takes it out and then still close with a weak candle, like not a body candle, then you can short below this trend and then have your stop loss above that weak that area in the candle last can be dropped. You understand? So I'm just there are a lot of concepts, a lot of concepts you should know on this. Most of the time I've been hopping on a trade. When that trade is going negative, and then that's when I begin to show myself reasons why I wouldn't have entered this trade. It happens. Because these billions of people trading, you understand? Billions of people trading GPUs, billions of people trading with different currency pairs, right? Now you're seeing a buy, someone else seeing a sell. Meet that person will give you his confirmation, which might be good enough to convince you, like, go here for it. But at the end of the day, it might end up being your answer to like for it. So just trade your strategy, trade what you see and not what you think. There's one of my team, whenever he's showing me, telling me, I think this, no, it doesn't like I think. You don't think anything. It's not about that owns this industry. Just trade what you see. And what I can see on this type of point now is a downtrend. So what do I do? Wait for this zone and I short. Do you understand? So that's just the simple thing that happens here. It's not like a magic. You understand? Trust me. If tomorrow I get married, have my child can, if I don't begin to nurture him and into this, right? My child can't grow and have this knowledge. No, this will have this. Juju is not even here. It's not by magic. It's not by. It's not in gene. You understand? This is a knowledge you have to work hard. And that's why any successful trader is proud of himself because he worked hard for it. I know it took me to be at this level I am now. So that's the guy. So let me remove all this. I don't want my chat to be that. So for now, I'm sitting here as an engagement area. So I'll map it out soon. IDM for now, an engagement. Sorry. What tool did I use here? I will come back to this later. Okay, guys. So I think I've explained what liquidity run and liquidity sweep, liquidity run and then liquidity run and liquidity sweep is, right. Liquidity run when price takes that your zone out and then continue to that opposite side. You're trying to short, price takes it and continue to buy. That's liquidity run. Price continue to run to that direction. You change the color that no, we call it market structure shift, right? But liquidity sweep is just price taking your zone out and then see continue to that your buyers. Your buyers was for yourself. So price took to stop loss and then continue to the downside. Now, if you are expecting price to give a double top, you know the price is supposed to retest all the way here, right? Forming a double top and continue to sell. But price to come here, takes this double top and like move a little to the outside, then still sell. That's a liquidity sweep, liquidity grab. You understand, guys? So, what else can we talk about? What can we talk about? I have told you guys if you don't know how to do the countdown analysis, the top down analysis, I told you guys I have explained how to map out key levels, right? Then go to my YouTube channel, Forex Academy, search for the video. You're gonna see it, or I will add the video link here so you use it to watch. Learn how I do top down analysis because if you don't have a top down analysis, bro, you're gonna make a lot of mistakes, right? Because now even as we are in a downtrend, right? If if by tomorrow now sorry, Monday, price moves all the way here, and then Tuesday, my trap is mitigated, right? Like it's activated, and then I start selling, right? I wouldn't try to I wouldn't try to hold this trade to break this demand. I will just simply respect myself to be disciplined, right? I'm selling from here down here. I take my profit. This is about 64 pips. You can just even make it 60, right? It gives a good loss size, and you're good to go. Right? Just respect it that there's actually a demand zone here. So there'll always be a rejection. Price might end up breaking it, but there'll always be a rejection. And if unless you're a swing trader, you can hold it that your setup, that your trade for days, weeks, right? Then you can hold it. But if you're not a swing trader, don't wait until price now you're on $10,000 profit, then price is reducing to 8,000. Then you're like, bro, I lost 10,000 now. I'm still gonna wait for this price to come back to that 10,000. Now you end up to close in 3,000 or you close it in negative. You understand? So that's why you have to learn how to take profits. You understand? You have to learn how to take profit. Now you can see yesterday being Friday, price moved how many pips from this news that you took to down here, about 77 pips, right? But I told you guys I closed here. Let me show you how I closed. Sorry, I remove this and come here. I closed about 30 pips or so, 35. I closed around here. Yes, there's something pips. You understand? So that's just me being disciplined. You can see now I closed price, I having rejections and all that, and of which I wasn't ready to wait for it. Just like taking the profit I'm seeing currently. That's just usually making money. You understand? So because one thing I can tell you that you can know that you as a forex trader, you can know that okay, when price comes, this is what will happen. You say or you begin to buy, right? But once that your trap is being activated, I tell you, bro, I put you wouldn't know what's happening next. You understand? You wouldn't know what's happening next. But I was telling you guys the best strategy is smart money concept. If you don't know what is smart money concept, you just there's this word they say trading with the big banks. those financial institutions, right? Because they hop in with billions and trillions of dollars on the trade. So they tend to have the liquidity, right? They tend to have the liquidity to sweep and all that. So that's how we always wait for them to take out liquidity and then we hop in, playing what they are doing, right? So we trade towards the break. An SEC trader, we always find his way to hopping on a trade, but you can see a smart money SMC trader, right? Price have started here, right? Have given these um lower highs, then this and a locked other block, then gave this unlocked other block, then pushed the downside. The unnecessary always wait since price again break or structure. So he's trading towards the break. He always wait for price to come back here and then he will trade. But a nice trader might see opportunity to buy from here, right? Might see opportunity to buy from here to here. Yes, it works out for them, but that is strategy that I didn't learn that. I just do what I learned. I learned assignment for the understand. So I just tell you SMC is just the best strategy you should learn out there. You understand? So if you want my SMC course to receive the link, um, it costs just $20, right? But if you want full mentorship, it costs $30. If you want to get the course to get the course, $80, which contains a lot of video, SMC strategy. You watch another, but if you want the full mentorship, right? Which I teach and all that, it costs $30. So I think that will be all for now, guys, this video. So let me know if there's anything I'm missing to say here because I think actually Jordan thing I was just saying whatever I remember. So if there's anything you need to still learn about with how to make good set of high probability stuff, just put that on the comment section, or if you really have me on WhatsApp, message me. Because I don't ignore chat. I reply you. Whatever needs to use voice to explain, I explain. Whatever need that we go live, I go live explain to you. Whatever need I record a session and send to you, I do that. I just enjoy teaching because I believe that the more I teach, I learn every day. You understand? The more I teach, the more I learn. That's just the industry. So thank you guys. So don't forget to subscribe if you're watching this on YouTube, subscribe to the channel, turn on the notification bell, and get notified whenever you upload new videos. Thank you.